50% audit and assurance that we have already studied at state level. 50%. Out of remaining 50%, 25% means something new audit that we haven't studied before. But I'm assuming we haven't studied audit and assurance. We haven't studied accounting standards. Obviously, other 25% that is relating to AAA, obviously we haven't studied. So we are studying everything from basic because we need to pass this paper in this attempt. I'm trying my best. Prepare yourself in 2 to 3 months. It's not a difficult paper. It's not a difficult paper if you are practicing a question on regular basis with me. It is a more difficult paper if you're not practicing a question with me. If you're just attending the question, not practicing by yourself, it's the toughest paper among all 4 optional paper. It's easy if you are studying with me on regular basis. Weekly basis, we are having 1-2 classes, and you are practicing question. What you need to do at home, just practice the question that we have covered in the class, nothing else. You don't need to study anything by yourself. Everything covered in the class, just you need to practice the question that we have covered in the class. Okay. So in previous lecture, we have discussed about audit report. There were 5 types of audit reports: standard worded unmodified report, unqualified report with a paragraph, qualified report, mean except for opinion due to material misstatement or due to scope limitation, adverse report in case of pervasive misstatement, disclaimer report in case of pervasive nature of scope limitation. And we discussed different contents of the report: title addressing, opinion paragraph, basis for opinion paragraph, key audit matter, CAM, other information, management responsibility paragraph, auditor's responsibility paragraph, other reporting responsibility if required by local law, and then auditor name, signature, address, and date. If you want to include emphasis of matter, it should be placed before CAM. If we want to include other matter, it should be placed after CAM. If you want to include both should be placed together, either both before CAM, either both after CAM. If there was a matter on which we have qualified the opinion, the matter on which we qualified the opinion is explained where? In basis for opinion paragraph. Obviously, from audit point of view, it is a key audit matter as well. We don't need to repeat in CAM. If there is any other matter that we want to highlight in CAM, we can highlight, but the matter on which we have qualified the opinion, so we have explained the reason behind the qualification relating to that matter in basis for opinion. If any matter that is important from shareholder point of view, that we will highlight by using emphasis of matter paragraph. From audit point of view, might be that was a key as well. But if we have highlighted through emphasis of matter paragraph, we should not repeat it under CAM. If any of the matter other than financial statements that we have highlighted through other matter paragraph, could be that matter is a key from audit point of view. If we have highlighted through other matter, we should not repeat under CAM. Emphasis of matter important from shareholder point of view. We only highlight the matter, we don't explain their audit approach. Key audit matter important from audit point of view. Not only we highlight the matter, we highlight, explain its brief audit approach as well. Key audit matter is a compulsory part of all report. While emphasis of matter is not a compulsory component of the audit report, it will come with modified report. Okay, moving forward. towards our question. Mar. So we are having this question, Mar from June 14 paper. There are three requirements of the question. Requirement A for 5 marks, requirement B for 5 marks, and then we are having requirement C for 10 marks. Altogether 20 marks question. Requirement A of the question for 5 good marks. ISA 510, initial audit engagement. We don't know what is ISA 510. ISA 510, initial audit engagement. We will study this in future. So I'm leaving requirement A now. Requirement B of the question for 5 marks again. You are an audit manager in Fender and Company, and you have received a query from an audit senior. So you are manager, you are receiving query from your senior who is working under you. On the subject of ISA 701, what is ISA 701? Key audit matter, CAM is ISA 701. So ISA 701, communicating key audit matters in the independent auditor's report. In audit report, we need to highlight CAM, key audit matter, but we need to highlight matter heading, the reason why it is CAM, and brief audit approach. We have covered this ISA 701 yesterday. What is CAM? What is the purpose of stating a CAM? What we need to disclose, where we don't need to provide a CAM. So we have covered ISA 701. So what is query? Required for 5 marks, respond to the audit senior query, explaining the requirement of ISA 701 where relevant. What is senior saying? I have heard that this standard requires us to give several different auditors' opinion on each audit. If we are highlighting a key audit matter under CAM section, we are giving several different opinions. No, our opinion is one, and that is on the whole financial statements. Under CAM, we are not expressing opinion. We are just highlighting the key audit matter and explaining how we have verified during the audit, brief audit approach. It doesn't mean we need to provide opinion on each key audit matter section proper. No, our opinion will be one. That will be on whole financial statement. I am worried that we will have to do a lot more audit work to obtain evidence for each key audit matter. No, our work will be same that we normally perform. Just we need to disclose our work relating to key audit matter section in the audit report. It doesn't require we need to perform more work. And that it is pointless anyway, because if these things were really important, we would have included them in phases of matter paragraph. Here he is confused about phases of matter and key audit matter. In phases of matter, matter important from shareholder point of view, while key audit matter important from auditor point of view. In phases of matter, we only highlight the matter for shareholder. We don't explain audit approach. We only refer to the matter presented in the financial statements, while in key audit matter, not only we highlight the matter, we explain brief audit approach as well. In phases of matter, we include in modified report. While key audit matter is a compulsory component of audit report, it will come under even unmodified standard audit report as well. So for 5 marks, we can respond to his query. Is that 5 points we need to prepare? First, relating to several different opinion. No, our opinion will be one that will be on whole financial statements, not all separate on key audit matter. We need to perform more work. No, our work will be same that we perform normally. Just we need to highlight our work relating to key audit matter in the audit report. It doesn't require performing more work. It doesn't require you need to perform more detailed work. No, the work that is as per ISA you need to perform, you will be performing the same work. And then under 3 points, we can differentiate between phases of matter and other key audit matter. 5 marks. Moving towards part C. Required for 10 marks. Critically appraise. What is meant by critically? Critically doesn't mean criticize. Most of the students perceive criticize mean providing argument against. No, critically doesn't mean criticize. Critically mean in-depth explanation. In-depth explanation. It doesn't mean criticize. It doesn't mean providing argument against. Critically appraise. The word appraise. What does it mean by appraise? Both positive and negative we need to discuss. In argument is in favor, argument against. The word appraise, the word discuss, the word analyze, the word evaluate. All these words mean provide argument in favor and argument against. In both sides you need to discuss. So in-depth explanation of positive, negative, both. The proposed auditor's report. What is the proposed report? That has not been finalized. Company prepare propose financial statements, mean these could be our financial statements. In those financial statements, they make some adjustment, then they finalize and sign and issue. In the similar manner, auditor prepare proposed audit report. Who prepare? Audit manager. And then it is reviewed by the engagement partner. If it is okay, he will sign, mean finalize. So they have prepared proposed audit report. There could be some issues. So critically appraise the proposed auditor's report of Mar Company for the year ended 28th February 2024. Client year end is 28th February. And the audit report has been prepared but not finalized. So we need to appraise. We need to find the issues. We need to find the not only issue, if there is anything positive that we need to discuss as well. There are 10 marks. This means we should answer this part in 10 separate points. That we need to learn how to prepare separate 10 points while answering this question. And this approach we need to adopt while practicing the questions. If we adopted this approach, how to prepare points according to the marks, will easily pass this paper. Just we need to prepare 50 points, 50 valid points to score 50 marks and passing the paper. And for that, written practice is required. You need to prepare 1 point to justify 1 mark. To justify 1 mark, that is important. If you are not justifying 1 mark, no mark will be awarded. So we need to prepare 10 points, critically appraise, proposed audit report. So you are an audit manager in Taylor and Company, a firm of chartered certified accountants responsible for the audit of Mar Company. Your client name is Mar Company with the year ended 28th February 20x4. This means this year was started on 1st March 20x3. Is that 1st March 20x3? The draft financial statements recognize profit for the year of 11 million. If there are figures given in the question at start of the question, profit, revenue, total asset, this means there will be some materiality calculation involved. And this materiality will be having separate marks. So company financial statement showing 11 million profit. The audit for the year end is nearing completion. Obviously, you have prepared proposed report. This means audit work you have completed. Just you need to see whether further things you need to check and then finalize the report. And several matters have been highlighted for your attention by the auditor senior Axis Smith. The matters have been discussed with management and will not be adjusted in the financial statement. There are some matters that need to be adjusted in the financial statements but haven't adjusted yet. Number 1. in January 20x4, during year after year, 1 month before the year end. In January 20x4, a major customer went into administration. What does that mean? He is facing problems. If he is facing problem, might be we are unable to receive receivables from that customer. There was a balance of 2.5 million owing to Mar company from this customer at 28 February 20x4. In balance sheet, they have shown receivable of 2.5 million. And that customer is facing problems. And there are chances of bad debts, which is still included in trade receivable. This 2.5 million against this 11 million profit, how much is that? 22%. Is that 2.5 divided by 11 multiplied by 100? How much is that? Come on, quick. 2.5 divided by 11 multiplied by 100.
22.7273.
22.7% and hence material. Enhance material. Is that okay? This means if this receivable is not adjusted against 2.5 million, ultimately receivable overstated, profit overstated, expenses understated, there is material misstatement. In case of material misstatement, what kind of report we should issue? Qualified. This is one matter. Okay. Number 2, a court case began in December 20x3. December 20x3, 2 months before year end. Is that 2 months before year end? Year end is February 20x4. Involving an ex-employee who is suing Mar company for unfair dismissal. And if he proved his dismissal was unfair, this means company need to pay the damages. Lawyer estimated that damages of 50,000 are probable to be paid. So what were the conditions of IAS 37? If we discuss IAS 37, what was the name of IAS 37? Contingent liabilities and contingent asset. If we try to revise that standard, IAS 37 is saying if any of the event or any of the matter meeting 3 conditions, there must be provision. What are the conditions? Present, legal, or constructive obligation. Present, legal, or constructive obligation from past event. Past event mean event before year end, because we need to create provision at year end. So event should be of before year end, and there must be present legal, mean at year end there must be any legal obligation or constructive obligation. Legal obligation mean there is a court case. Constructive obligation that you have constructed by yourself, mean you have provided warranty to the customer. So at year end there is obligation, you will be receiving warranty claim from the customer that you need to pay. Constructive, you constructed by yourself, like warranty, you have provided warranty to the customer. In that case, there should be warranty provision. Legal, there is court case from any of the employee, from any of the customer, or from any other party. Might be during the year you non-complied with law regulation, there is a court case going on, so there is obligation at year end. So present, legal, or constructive obligation from past event. Probability of future economic, mean money outflow, mean chances of future payment. And probability mean 50% or more chances. If chances are less than 50%, possibility. Probability means chances are more than 50%. You need to pay the money. Who will be the main source will define whether probability or possibility? Lawyer. And amounts can be measured reliably. Mean you are aware about the amount as well. How much payment you need to pay. If any of the event or matter meeting these three conditions, there must be provision. And how we should record provision? Debit expense, where we record expense in P&L, credit provision liability, where we record a liability in balance sheet. Provision we need to account for. How to account for? Expense debit, provision credit. If there was provision required, company haven't recorded the provision. In that case, expenses, liabilities could be understated and profit overstated. If there is no probability but a possibility, possibility means chances are less than 50%. In that case, we need to disclose contingent liability. Contingent liability is disclosed only, not accounted for. There is no accounting entry for contingent liability. There is no account balance in financial statements as contingent liability. We do not record liability as contingent liability. No, it is only disclosed. Is that? There is accounting entry for provision, no accounting entry for contingent liability. Are you with me? If there is probability, not possibility, probability of future economic inflow, mean receiving money, not outflow, inflow, receiving money. In that case, we need to disclose what? Contingent asset. Contingent asset is also disclosed. There is no accounting entry for contingent asset. We do not record any asset as contingent asset in balance sheet. Probability of inflow, not possibility. Probability of inflow, contingent asset. Probability of outflow, provision. Possibility of outflow, contingent liability. Are you with me? Okay, now moving toward this question. A court case began in December 20x3, mean before year and mean past event, involving an ex-employee who is suing a mark company for unfair dismissal. They dismissed, mean there is present legal obligation from past event. Lawyers estimate that damages of 50,000 are probable to be paid. There is probability and there is amount given. So there must be provision with 50,000. Is that? The financial statements include a note describing the court case. Mean they have disclosed, not recorded the provision. And quantifying the potential damages, but no adjustment had been made to be included in statement of financial position or the statement of profit or loss. Mean no accounting entry, mean expense debit, liability credit, mean nothing in balance sheet, nothing in P&L. Provision is not recorded. How much is the amount? If you compare 50,000 with the 11 million, that is what 0.5 million divided by 11 million multiplied by 100. How much is in percentage? Is that 5% or more? Four point something percent.
4.555.
4.5% and hence immaterial. Is that? If we combine both the issues of bad debts and provision, By combining both, will be having only material effect, not pervasive. Because the second matter is not material even. If both issues are not corrected, so both will be having material misstatement effect on the financial statement, not pervasive. This means for this company, if they don't adjust these two matter, audit opinion should be qualified with except for. We haven't started our answer yet. Because answer, we need to appraise the proposed audit report. We haven't seen the proposed report yet. This is a story behind the report. What was the issues in the company that during audit we found, and what could be the implication on report. We haven't started our answer yet, but we are analyzing the situation. What is happening? So for this company, we realize there must be qualified if there is no other misstatement. Axis Smith has produced a draft auditor report for your review and extract, which is shown below. Yes, this is the draft report that we need to critically appraise for 10 good marks. Now, let's see how we can prepare 10 good marks. So this is the draft audit report, not complete report. He has provided some extracts, means some parts of the report. Basis for opinion and disclaimer of opinion. If you see the heading, basis of our opinion and disclaimer of opinion. First, there should be separate paragraph for opinion and separate paragraph for basis for opinion. This heading is showing like he has included both the paragraph combined. Even if you look at the heading is wrong. By looking at the above matters, there is a need for qualified report. So this paragraph heading should be basis for qualified opinion. Is that? So we can discuss 2 points from here. Separate paragraph for opinion and separate paragraph for basis or opinion. We cannot provide both information in one paragraph. And then as per the above matters that need to be adjusted, there is a material misstatement requiring qualified report. So heading should be basis for qualified opinion rather than basis or opinion. And the heading is saying disclaimer of opinion. There is no chance of disclaimer of opinion. Because disclaimer of opinion will come when there is a scope limitation of pervasive nature. Here, even the matters are what? Material, not pervasive. Is that? Because if we see the first matter that is relating to receivable, that is what? How much percentage? 22.7% of profit and hence material. The second matter of provision, that is a 4.5% of profit and hence immaterial. By combining both matters, there is a material misstatement rather than pervasive. And there is issue of misstatement rather than scope limitation. So there is no need for disclaimer of opinion. How many points we have discussed till now? We haven't studied even the report. We have just studied one heading. How many points we have discussed? 1, 2, 3, 4, and then disclaimer 5 points we can discuss. Because these materiality will be having separate mark. In this receivable balance of 2.5 million is a dash percent of profit and hence material. This 50,000 provision that is not recorded is dash percent of profit and hence immaterial. By combining both the matters, it's creating material effect rather than pervasive. Disclaimer is required when there is a pervasive nature scope limitation, and here there is material nature, not the pervasive. And there is a material misstatement rather than scope limitation. So disclaimer is inappropriate under this situation. Are you with me? We are learning how to prepare different points according to the marks. That approach we need to adopt. We have performed our audit based on materiality level of 1.5 million. In audit report, they are saying We never ever state our materiality level in audit report because this is based on auditor's judgment. For some company, we calculate materiality based on 10% of profit. For some companies, we calculate based on 5% profit, and it is varying from company to company. So stating materiality level in the audit report is inappropriate. We will not say disallowed, we will say inappropriate. So we can prepare one point for this as well. Our audit procedures have proven conclusively that trade receivables are materially misstated. We'll put even heading, we can put conclusive. Conclusive is saying we are having 100% evidence. I mean, we have verified everything. No, we obtain sufficient appropriate audit evidence rather than conclusive. So these kind of words we should avoid using in audit report because we never ever have conclusive evidence. We are having persuasive evidence. Persuasive means less than 100% rather than conclusive mean 100%. The finance director of Mar company, Rita Gilmore, has refused to make an adjustment to write off significant trade receivable balance. If there is any misstatement in the financial statement that management haven't corrected, we can explain that misstatement in the audit report, but from company point of view, not from any particular individual point of view, because who is responsible for financial statements? The management as a whole, rather than any one individual. Mean by using the word of this finance director name, we are attacking his integrity. By using his name, might be he can sue for damages as well. Because the whole management is responsible for financial statements. So we should discuss misstatement from the company point of view rather than any person point of view. So using name of any person particularly, that is inappropriate. We should avoid using this. So name of finance director, we can prepare one more point. Is that? Therefore, in our opinion, the financial statements of Mar company materially misstated. Materially misstated mean everything is wrong. There is a material matter rather than pervasive. In case of material misstatement, we should express qualified report with except of our opinion. But here, he is expressing adverse opinion, mean whole financial statements are materially misstated, mean wrong. And therefore, express a disclaimer of opinion because we do not think they are fairly presented. What he trying to say? On one side, he is expressing materially misstated. On the other side, he is saying we are issuing disclaimer opinion. I mean, he is not clear about the reporting concept. Disclaimer opinion is used in case of pervasive nature scope limitation. And here, there is a material misstatement rather than scope limitation. We are having evidence. Is that? So qualified except of our opinion is appropriate rather than adverse, rather than disclaimer. So we can discuss one point more. How many points we have discussed? On this heading, we have discussed 5 points, including 2 materiality. Then materiality. Then conclusive, 7. Using name, 8. And then we can discuss even 2 points on this. But there is still some part left. Emphasis of matter paragraph. When we should use emphasis matter paragraph? To highlight any matter correctly presented disclosed in the financial statement. It always comes with unqualified opinion, never ever with qualified opinion. Is that appropriate under these circumstances? No, here we are issuing qualified report. In case of qualified report, we have explained the matter in basis of opinion paragraph. There is no need for emphasis of matter because it comes with unqualified opinion always. Never ever emphasis matter will come with qualified opinion. Okay, see what they are saying. So emphasis matter, we can make one point. It is inappropriate here. Mar company is facing a legal claim for an amount of 50,000 from an ex-employee. Obviously, there is a matter of financial statements that we can highlight it through emphasis matter, but if the matter is correctly presented, disclosed. Here, this matter that is disclosed in financial statements, it is incorrectly disclosed. Is that? So not requiring to be disclosed by using emphasis of matter first. In our opinion, this amount should be recognized as a provision, but it is not included in statement of financial position. In emphasis matter, we only refer to the matter. We do not contradict with the matter. If any matter is stated wrong in the financial statements, on that we qualify the report and provide explanation reason where in basis for opinion. And here in this paragraph, he is contradicting in the matter. Even he is highlighting the matter incorrectly presented disclosed. We draw your attention to this breach of the relevant IFRS. No, this is not appropriate inclusion of emphasis of matter. Can we answer this part in 10 points? These 10 points you need to prepare by yourself. And this approach we need to adopt while practicing the question. If we have adopted this approach, this paper is nothing. My students are struggling in this paper. They are unable to make points according to the marks. They are unable to prepare points according to the marks. Working on these 1.1 valid marks, I scored 82 marks in this paper. Because I mentioned 82 good points while attempting the paper. It was in 2010. Now, one of my friend, he got 87. No. The rank holder was having 92 marks. 10 marks more than me. No. Because I was studying in UK. The distinction holder was also from UK. I was at that time I was studying in UK, and the distinction holder was also from UK. So we need to adopt this approach, how to prepare points according to the marks. Please. Moving forward. So let's discuss one more auditing standards. Till now, we have discussed some auditing standards. We have discussed about ISA 320, materiality, ISA 700, standard worded unmodified report, its contents, ISA 705, that is on qualified reports, qualified adverse disclaimer. Qualified adverse disclaimer, under what circumstances we should issue qualified, under what circumstances we should issue adverse and disclaimer. So this standard is what? ISA 705. We have discussed ISA 706 as well, emphasis of matter and other matter. When we should use emphasis of matter and when we should use other matter. We have discussed ISA 701 as well, e-audit matter. So these are 5 auditing standards we have covered so far. Are you with me? Let's move towards another auditing standard, ISA 500. Audit evidence. ISA 500 audit evidence. As for ISA 500 audit evidence, auditor shall obtain audit evidence shall obtain sufficient and appropriate audit evidence before expressing the opinion. So as per ISA 500, even as per ISA 700, auditors shall obtain sufficient and appropriate audit evidence before expressing the opinion. If you have sufficient appropriate audit evidence, express the opinion, means say this is true or does not provide true and fair view. If you don't have evidence, keep your mouth shut. You're not allowed to express an opinion because you will not be able to justify that. So we should obtain sufficient appropriate audit evidence. What does mean by sufficient audit evidence? And what does mean by appropriate audit evidence? Sufficient mean audit evidence must be sufficient, mean must be in quantity. Quantity mean enough. While appropriate mean audit evidence must be quality, reliable, and relevant. Sufficient mean audit evidence must be in quantity. What does mean by quantity? Audit evidence must be 5, must be 50, must be 10, must be 20. What does mean by quantity? Quantity doesn't mean any fixed number. Quantity mean you should obtain as much as evidence you can. Mean there must be enough evidence. As much as you can, you should obtain. Mean throughout the audit, you should maintain your professional skepticism. You should maintain your professional skepticism. An auditor must be professionally skeptic. Skeptic mean auditor must be of critical nature. Auditor must be of critical nature. Auditor must be of questioning mind. Though you have found the evidence, you have obtained the evidence, still keep in your mind, no, there could be issue. Try to seek more and more evidence as much as you can. Do not rely on the evidence that you have obtained. Throughout the audit, you should try to get more and more evidence. If you have obtained evidence from the accountant, try to get evidence from top management. Try to get that evidence from company internal auditor. Try to get that evidence from other employees as well. So try to get more and more evidence. Mean audit evidence must be sufficient. Sufficient mean quantity. Quantity mean enough, not 1, 2. You should always maintain your professional skepticism throughout the audit. And audit evidence must be appropriate. Appropriate mean audit evidence must be quality, reliable, and relevant. What's the quality and reliability of audit evidence? External evidence are more reliable, more quality than internal evidence. For cash at bank, leases, loan, we should confirm balances from the bank, that is external, rather than relying on internal documents. For receivable, we should confirm from the customer. For payable, we should confirm from the suppliers. These are more reliable than obtaining evidence from within the company records. Internal, reliable. If company control system is strong, control system means company have implemented proper policies, procedures, and there is a monitoring of compliance of those policies, procedures, then you can rely on internal evidence. If compliant internal control system is weak, there is always high chances of fraud and errors. Do not rely on internal evidence. Original documents are more reliable than photocopies or faxes. Because those photocopy or a fax could be prepared fake. Original documents. If we want to inspect any of the document, always inspect original document. If we want to check the ownership of the asset, always check the original document rather than photocopy or faxes. Else. External more reliable than internal. Internal, if control system is strong, original documents are more reliable than photocopies or faxes. Auditor generated evidence is more reliable. Mean you should always perform procedures to get evidence rather than taking evidence from any other person. Internal auditor also perform test of control substantive procedure. Instead of taking evidence from internal auditor work, you should perform your work by yourself and then get the evidence that is more reliable rather than obtaining evidence from someone else's work. So auditor must obtain sufficient appropriate audit evidence before expressing the opinion. Sufficient mean audit evidence must be in quantity. Quantity doesn't mean any specific number. Quantity mean you should get as much evidence as you can by maintaining your professional skepticism throughout the audit. Appropriate mean audit evidence must be quality, reliable. What is mean by quality, reliability of the evidence? External evidence are more reliable than internal. Internal are reliable if control system is strong. Original documents are more reliable than photocopies or faxes. Auditor generated evidence is more reliable than obtaining evidence from someone else's source. So documentary evidence, mean written evidence, is more reliable than oral evidence. If you are getting any information while discussion with any of the employee, don't just only discuss, ask him, okay, sign this page, you are providing me this information. Because tomorrow that employee could deny, I haven't provided this information. So always focus on documenting written evidence rather than oral evidence, because that is more reliable. The audit evidence must be relevant. What does it mean by relevant? Audit evidence will be relevant if it is a supporting financial statement assertions. Audit evidence will be relevant if it is a supporting financial statement assertions. The word financial statement assertions also called management assertions as well. What is meant by assertions? Assertions mean representations or claims. While preparing financial statements, company management claims certain things. What do they claim? All the figures are completely recorded. All the figures occurred during the year. All the figures are properly classified under appropriate head. All the figures are accurate. The value of a valuation of asset is appropriate. We are having rights and obligation relating to the assets. All the assets that we have recorded, actually they exist. What we need to do? We need to verify these assertions. When we are performing substantive procedure. The purpose of substantive procedure is to verify financial statement assertions. The purpose of test of control is to take evidence about control effectiveness. But the purpose of substantive procedure is to verify financial statement assertions. And there are some assertions that are relating to income statement item. There are some assertions that are relating to balance sheet items. What are the assertions relating to income statement item? Means statement of P&L. O triple C A. O stands for occurrence. C stands for C stands for C stands for A stands for accuracy. Occurrence, completeness, classification, cutoff, accuracy. There are some assertions for balance sheet item. What are those? VCR E. VCR E. In old days, we used to play videos using VCR. We used to watch movies using VCR device. There were some cassettes having the data of the film. That cassette we run on VCR device. So VCRE. VCRE stands for V stands for valuation. C stands for completeness. R stands for rights and obligation. And E stands for existence. So audit evidence will be relevant if it is supporting financial statement assertions. If we have verified these assertions relating to income statement item, balance sheet item, this means we have relevant, appropriate audit evidence. If we are unable to verify these assertions, we don't have appropriate relevant evidence. Will not be able to express opinion. When we verify these assertions, when we are performing substantive procedure, the purpose of substantive procedure is to verify these financial statement assertions. What does mean by these assertions? There are 4 account heads, or 5. Income, expense, asset, liability, and equity. Income and expenses we record in statement of financial P&L, and assets, liabilities, equity we record in statement of financial position. Income, expenses we record in P&L, and equity, assets, liabilities we record in balance sheet. This means these assertions we need to verify for income and expenses. Occurrence means all the income that have been recorded, they actually occurred. There is no fictitious or overstatement of income. They have actually occurred. And if the sale is recorded, it is actually occurred. How we can verify it is actually occurred? We'll compare the sale amount with the invoice. If there is invoice document, this means the sale has been occurred. If there is no invoice, this is fictitious or overstated. If sale is recorded, there must be cash or receivable recorded. If there is no entry in cash book or no entry in receivable ledger, this means the sale is what? Fictitious, not occurred. Is that completeness mean? All the figures have been completely recorded. There is no missing or understatement, especially expenses. While preparing financial statements, what management try to do? They will overstate income and assets, and they always try to understate expenses, liabilities, and equities. Is that? So this means completeness. Figures are completely recorded, not missing, understated, mainly for expenses rather than income. They are not stupid enough, they are understating the income. Because income, they always try to overstate. So occurrence, mainly we need to check for income. Completeness mainly we need to check for expenses. For example, classification. All the figures have been correctly classified in their appropriate account head. What does that mean? We need to see if there are any admin expenses, they are classified under admin expenses rather than direct expenses mean cost of sale. Because admin expenses are relating to management, while cost of sale expenses are relating to production. Nobody can ask question on cost of sale expenditure. But on admin expenses mean management related expenses, shareholder can ask question why they has been increased. So there could be chances of misclassification of operating expenses to direct expenses. So we need to see whether all income, all expenses have been classified under appropriate account head. What is the cutoff? Sometimes company management commit some kind of cutoff errors. So our year end is 31st December 2024. This means this year was started on 1st January 2024. This is the year end. What happens sometime? From here onward, next period will start. What happens sometime? Company management record sale of January in December and record expenses and purchases of December in January so that they can overstate current year profit. This is called cut-off error. Suppose they received order on 28th of December. They deliver goods on 3rd of January. Where sales should be recorded in January or December? Where sales should be recorded in December or January? In January, because you have transfer risk and reward in January. So this sale revenue should be recorded in January, but they are recording in December because we received order in December. Sir. Even you have received amount in December, you cannot record the sale in December. So this kind of errors are called cut-off errors, meaning cut-off, we need to make sure whether transaction have been recorded in their correct period or not. In this sale is relating to next period, not relating to current period. So in cutoff, we need to make sure whether transaction have been recorded in their correct period or not. And regarding accuracy, we need to check whether all the figures recorded are accurate. There is no arithmetic error. There is no calculation error. Units multiplied by price is equal to gross sale less discount is equal to net sale. There shouldn't be any calculation error. I mean, all figures have been accurately recorded. There is no arithmetic error. What does it mean by balance sheet assertions? In balance sheet, we record assets, liabilities mainly. And management always try to overstate asset and understate liabilities. Valuation means we need to verify all the assets and liabilities have been properly valued. Especially assets are not overvalued. How asset can be overvalued? If company is not recording depreciation or not recording appropriate depreciation. If you are not recording appropriate amortization on intangibles. If you are not recording inventory on lower of cost and RV, you are recording on higher amount. If you are not adjusting bad debts against receivable, so asset could be overvalued. So we need to see whether depreciation has been appropriately recorded. Inventory is recorded on IAS 2, as well as receivables have been adjusted against bad debts. Completeness. All figures have been completely recorded. There is no omission or understatement, especially for the liabilities. If any provision is required, that has been recorded. If there is any accrued expense, that has been recorded. Rights and obligation, also called ownership. We need to verify the asset recorded in the financial statements company actually owned them. How we can check ownership of asset? For motor vehicles, Registry documents we can inspect. For land and building, title deeds, registry document. For other assets like machinery equipments, we can inspect the invoice, because invoice will be stating whether company have paid the full amount or any amount due. How we can check existence of assets? Asset register, they are written in asset register as well as a record. Physical inspection, we will physically inspect the asset. If 5 cars are written in the asset register as a motor vehicle, we will inspect the 5 cars are there in the company. If car has been recorded on high amount, we will check their condition as well. I mean, they are not a Suzuki car, they are according to the value. Like if they have recorded electric car, we will see electric car are there. If they recorded a machinery of 500,000, we will inspect not only the machinery is there, we will see it's of 500,000 value, is not of 50,000 scrap machinery over there. So these are the assertions we need to verify while performing substantive procedure. If we have verified these assertions, this means we got relevant mean appropriate audit evidence. So ISA 500 says auditor shall obtain sufficient appropriate audit evidence before expressing the opinion. Sufficient mean audit evidence must be in quantity, enough, and appropriate mean must be quality, reliable, as well as relevant. Let's discuss one more topic: procedures. To collect audit evidence. And I need your attention in this part. This is the part where student filling the paper and they don't know how they filled the paper. So we are going to discuss the procedures that auditor perform to collect audit evidence. Word procedure mean action of the auditor. Procedure mean action of the auditor that he is performing to collect audit evidence. Audit evidence mean outcome of the procedure. Mean after performing the action, what you are having in your working paper, that is evidence. If you are saying this is true, this is wrong, anybody will ask, where is the evidence? What you will show? What you will show? Your working paper. Your working paper. Working paper could be manual paper, or could be computerized. Even computerized, what is that? Written form that you can take as a printout paper. So evidence means documents that you are having in working paper. Procedure means action that you have performed to collect that evidence. If examiner is asking, you need to write down the procedure, you need to write down your action, how you will verify this, what you will inspect, what you will observe, what you will discuss. That is what procedure, action. If we are going to verify bank loan, the procedure will be inspection of loan agreement to verify amount, interest rate, and time period. This is what your action. You have inspected the loan agreement copy to verify, mean you have read what is the amount of the loan, what is the interest rate, what is the time period, what are the condition attached. This is procedure. After performing this procedure, what is the evidence you have? In your working paper, what you have? Copy of loan agreement. You took the copy of loan agreement and you put in your working paper, this I was inspected. So copy of loan agreement to verify amount, interest rate, and time period. This is what evidence. Examiner is asking, write down procedure. We will write down our action. Inspection of loan agreement to verify amount, interest rate, and time period. If he is saying no, write down the evidence. What we will say? copy of loan agreement. Don't use the word inspection. This is not asking for action. Inspection is what? Action. Evidence, what you are having after the procedure in your working paper. So in working paper, what we are having after the procedure? Copy of loan agreement. Why? To verify amount, interest rate, and time period. Are you with me? If we want to check existence of asset, the procedure will be physical inspection of the asset to verify its existence. This is what action means. We physically move to that area and we inspected the asset was there. What is evidence? Recording of a physical inspection. When we physically inspected, so we written down everything in the working paper. So we physically inspected the asset at that date, that time, and we verified the existence. So recording our notes of a physical inspection of the asset to verify its existence. This is what evidence. In case of evidence, we need to write down the name of documents that we are having in the working paper. That document we obtained are prepared while performing the action in procedure. Procedure we have performed 3 days back. Evidence we are having now in the working paper. Are you there? Procedure we can write down while performing current. While evidence we are having in the working paper that is based on past procedure. So procedure means action, what you will do. Evidence means after performing that action, what you got in your working paper that you will retain in the working paper file. This is very important distinction. 20 marks in your AAA paper are relating to procedure and evidence. Sometimes examiner asks for procedure for 5 marks. What student doing? They are writing evidence. He is asking for evidence. What they are doing? They are including procedures. And from their side, they have attempted the full paper. But after failing, they don't realize how we failed the paper. I have attempted full paper, how I failed. Because they are not distinguishing between procedure and evidence. So there are some procedures, mean action of the auditor that auditor performed to collect audit evidence. What are the procedures? There are 7 procedures. Mean action, inspection, observation, inquiry, confirmation, recalculation, re-performance, and analytical procedure. So these are 7 procedures that auditor performed to collect audit evidence. Mean these are 7 action of the auditor that auditor performed to collect audit evidence. Inspection is of 2 types. Document inspection and physical inspection. Physical inspection we perform to verify existence of inventory, existence of asset. Or if there is anything happened like any fire, destroyed warehouse, so we'll physically inspect the area to see whether fire has destroyed the warehouse. Physical inspection of the area, physical inspection of the asset, physical inspection of the inventory to verify existence. Document inspection we perform like we need to check the ownership of the asset. What we will do? We will inspect the title deeds, that is document. We need to verify the known amount interest rate. We will perform document inspection, means inspection of loan agreement. This is what document inspection. Physical as well as document. Observation, this is used to perform test of control. Companies are having a control when any employee entering the company, they scan a card with the machine. Automatically their start time is entered into the system. At end of the shift, they scan the card again with the scanner. Their end time is entered into the system. So we'll observe whether at the morning, every employee is scanning a card and his own card. They are saying, no, we have installed a supervisor over there. He is checking every employee is scanning the card and his own card and single card. We'll observe that the supervisor is there and he is checking the employee scanning only single card. This is what observing whether the control is performed properly or not, means supervisor is there or not. Observation. This is what auditor action. We are observing, watching. Instead of observation, we can use the word watch as well. Inquiry. If we need any information within the company, we will use the word inquire. Inquire from management, inquire from staff, inquire from internal auditor. Even we can use the word ask. Even we can use the word discuss. Discussion with management, discussion with accounting staff, discussion with internal auditor, ask the employees, ask the accountant. Within the company, if we need any information, the procedure is what? Inquiry, ask, discussion. What will be the evidence? Notes of discussion with management that we prepared after discussing what we got knowledge, that we will write down as a working paper. So notes of discussion. If we need any information outside of the company, we will use the word confirmation. Confirmation from the bank about bank balance, loan amount, confirmation from the customer about the receivables balance, confirmation from the supplier about the payable balance. So getting information within the company, inquiry, getting information outside the company, confirmation. Recalculation is used to verify accuracy. If we want to check the depreciation, what we will do? Recalculation of depreciation expense using the rate and policy and compare with management calculation for accuracy. Instead of recalculation, we can use the word recomputation as well. In the figure that have already been computed, we will recompute. The figure that has already been calculated by the client, we will recalculate. Recalculation of the interest expense using the rate and known amount and compare with management calculation for accuracy. Are you with me? What will be the evidence? Notes of the recalculation. Notes of the recalculation. Is that? Reperformance is also used for test of control. If the client system is manual, we check controls through observation. If the client system is computerized, we perform test of control using reperformance. Mean we will reperform some dummy transaction with the system and we'll observe the results, mean they are same as of client routine system results. Analytical procedure is what? Comparing one data with another data to verify the amounts and detail is similar. We can use the word agree as well. Agree sale amount in the ledger to sale invoice to see the amounts and detail are similar. Agree. Or we can use the word compare as well. Or we can use the word reconcile as well. reconcile sales ledger balances with the sale invoices to verify the similar amounts as well as detail. Are you with me? So when examiner is asking to write down procedures, our sentence should always start from these words. Physical inspection of the asset, inspection of loan agreement copy, watching the system, re-performing dummy transaction through the system, discuss with the management, confirmation of balances from the customer, compare this with this, agree this with this, recalculation of depreciation expense using the rate and policy. These are what procedures. And after performing these procedure, what we are having in the working paper that we can show to the world. This is evidence. That is what evidence. Evidence means documents, copies that we are having in the working paper. Recording of the procedure performed, notes of the procedure performed. Are you with me? If we want to check as per accounting standard whether the disclosure is in the financial statement or not, as per IAS 24, related party transactions should be disclosed in the financial statement. Company have performed related party transactions. We want to check whether there is disclosure or not. What we will do? Inspection of notes to the financial statement to verify completeness of disclosure. This is what procedure. What will be the evidence? Extracts of notes to the accounts. Extracts mean part of notes to the accounts. Copy of notes to the accounts extracts to verify completeness of disclosure. This will be what? Evidence. Procedure will be inspection of notes to the accounts to verify completeness of disclosure. So copy of notes to the accounts extracts to verify completeness of disclosure. This will be what? Evidence. We need to work on this area. How to write down procedure, action, and how to write down evidence. Evidence means outcome of the procedure that you are having in your working paper. Let's move towards a good question. You need break? Take 15 minutes break, then we will discuss this question. Take 15 minutes break. After that, we'll discuss this question. So moving towards another question, SNIPE. There are two requirements of the question, requirement A for 6 marks and requirement B for 7 marks. Requirement A of the question. For 8 good marks, in respect of your file review of non-current asset, we are auditing non-current asset. Comment on the matter that should be considered. Comment on the matter that should be considered. Comment on the matter mean we need to discuss accounting standard. In this particular situation, what the accounting standard says and what the company is doing, plus materiality calculation. There is some information in the scenario. There is some issue in the scenario relating to financial statements. So we need to discuss the accounting standard in this particular situation. What accounting standard will apply, what accounting standard say, what the company is doing, as well as we need to discuss the materiality. If company have applied the accounting standard correctly, we will just discuss the accounting standard. We'll perform materiality calculation. If company have not complied the accounting standard correctly, then we need to discuss the chance of misstatement as mean what could be understated or overstated due to this. And the evidence you would expect to find regarding the new processing area, and then you need to write down the evidence relating to this matter after the procedures. What the evidence you will be having in your working paper after performing procedures relating to this issue that we need to write down. There are 8 marks, 4 marks for the commenting on the matter. And for 4 marks, we should write down evidence, at least 4 evidence. 8 good marks. Let's see. You are the partner responsible for performing an engagement quality control review on the audit of SNIPE company. You are currently reviewing the audit working papers and draft audit report on the financial statement of SNIPE company for the year ended 31st January 20x2. Year end is 31st January 20x2. This means this year it was started on 1st of February 20x1. The draft financial statements recognize revenue $8.5 million, profit before tax of $1 million, and total assets of $175 million. There are some items who are having no link with the income statement. Their materiality we will check against total asset only. If any asset is recorded in balance sheet having no link with the income statement, their materiality will be checked against total asset only. Is that goodwill? Where it is recorded? Under asset having no link with P&L. So their materiality we will perform with total assets. Loan amount. We'll check materiality against total assets because the loan amount is having no link with P&L. Interest expense, that we can check against P&L item mean profit and revenue, but loan amount itself is a liability having no link with P&L. Are you with me? So company's profit, revenue, total assets figures are given, year end is given. What's the issue? During the year, SNIPE company's factory was extended by the self-construction of new processing area at a total cost of 5 million. So company have extended their factory through self-construction and they bear the cost of 5 million. Is there any accounting standard involved? Factory is what? Asset. If company is self-constructing any asset, there is accounting standard IAS 16, PPE. According to PPE, all the cost incurred from asset construction start date till completion date should be capitalized, including borrowing cost. Is that? So company have beared a cost of 5 million. So during the year, Snipe Company factory was extended by self-construction of new processing area at a total cost of 5 million. I mean, they have capitalized 5 million cost. First, we can perform this materiality of 5 million with 175. Is that 1% or more? Yes. It's 3 point something, I think so. 2.65 and handsome material. Okay. One point we can discuss as per IAS 16. All costs incurred from asset construction date till completion date should be capitalized, including borrowing cost. Included the cost capitalized are borrowing cost of 100,000, mean in this 5 million, there is 100,000 borrowing cost have been included. Borrowing cost mean loan, interest. If this loan is obtained for the construction of the asset and the interest from construction start date till completion date, we need to capitalize. After completion date, interest should be expensed out. Let's see. Incurred during the 6 months period of construction. In construction period was 6 months. A loan of 4 million carrying an interest rate of 5% was taken out in respect of the construction on 1st March 20X1. 1st March during the year, because this year started from 1st February. So there was loan of 4 million. This means 4,000 was the loan. The interest rate is 5%. What is the annual interest? 200,000. We need to see when construction started, when completed. For that time period interest, we need to capitalize. So construction started on 1st March. The new processing area was ready for use on 1st September 20X1. This means March, April, May, June, July, August, 6 months was the time period. So out of this 6 months interest we need to capitalize, and 6 months is what, 100, and they have capitalized 100 correctly accounted for. We can compare materiality of 100,000 with the profit of the company, borrowing cost, and hence material. Is that okay? So first point we will discuss 5 million materiality. Second point, as per IAS 16, all costs incurred from construction till completion date should be capitalized, including borrowing cost. And third point we will discuss 4,000 multiplied by 5% is equal to 200 multiplied by 6 by 1200 is the borrowing cost that is capitalized. This is that percent of profit and hence material. Is that 3 point we have discussed. Next. So construction was completed on 1st September. When we should start depreciating the asset? From the date of completion or when the asset is ready for use? Ready for use or the date of usage? Ready for use. So it was ready for use on 1st September. They began to be used on 1st December 20X1. They started use 20X1, but depreciation should be started from 1st September. And useful life is 15 years. So how much should be the depreciation? 5 million is the cost. 15 years is the life. Is that multiply by how many months? Depreciation for current year: September, October, November, December, January, 5 and 12. That will be, I think so, 333.3333 something. Is that? But for the current year, depreciation should be for 5 months, not the complete year. And we can check materiality of the depreciation with the profit and hence material. So for IAS 16, assets should be depreciated over its useful life. And for the current year, depreciation should have been charged by this amount. And this amount is that percent of profit and hence material. So we can discuss 4 points relating to matter. We'll put the heading matter. Accounting standard. as well as materiality. And the company have recorded accurately everything. We don't need to discuss a risk mean misstatement. If suppose company have capitalized 200, so we'll say no, 100 is meeting capitalized. If company recording 200, so by 100, asset profit could be overstated and expenses understated. Are you with me? Now we need to write down 4 evidence relating to this matter. After procedure. So while performing procedure, we had physically inspected the asset to verify its existence. Is that? So what we will say? Notes of the physical inspection of the asset to verify its existence. Is that? What else? This cost calculation documents we have inspected during the audit. So copy of cost calculation document. Copy of cost calculation document to verify the amount capitalized are correct. This is what evidence. What else? The borrowing cost, the loan amount was 4 million. How we have verified that 4 million interest rate is also 5%. We perform procedure inspection of loan agreement to verify amount, interest rate, and time period. So what is the evidence? Copy of loan agreement to verify amount, interest rate of 5%, as well as time period. Is that? The construction was completed on 1st September. How we can verify this? There are some completion document of the asset that we have inspected. So copy of completion document of the asset to verify construction completed on 1st September. Regarding depreciation, we have recalculated the depreciation procedure. What's the evidence? Copy of recalculation of depreciation. Copy of depreciation recalculation. Copy of depreciation recalculation using the rate and policy for accuracy. Can we write down 4 evidence, not procedures? What is the outcome of our procedure in working paper that we need to write down? Part B of the question for 7 marks. Critically appraise the extract from the proposed audit report of Snipe Company ended 31st January 20x2. The similar requirement of previous question. We have critically appraised the extract of audit report for 7 marks. That was 10 marks. This is for 7 marks. Before moving towards this part, let's discuss IAS 19. What was IAS 19? Employee benefit. Employee benefits. So employee benefits are of 2 types: defined contribution plan and defined benefit plan. Defined contribution plan and defined benefit plan. For this paper, AAA, we do not require the complete knowledge of some accounting standard, just we should require some knowledge. In case of IAS 19 employee benefit, there is some actuarial gain or loss under contribution or defined benefit plan. Under defined benefit plan, there is some actuarial gain or loss. Where actuarial gain or loss should be recorded? Other comprehensive. So what we need to remember for AAA from this standard, in case of defined benefit plan, actuarial gain or loss should be recorded under other comprehensive income. And second point we should remember, company need to provide a detailed disclosure of implied benefit in the financial statement. If actuarial gain loss is not recorded to OCI, there could be misstatement. If detailed disclosure is not provided, there could be chance of misstatement. Only these 2 points we need to remember for the standard for AAA point of view only. So actuarial gain loss in case of defined benefit plan should be recorded under other comprehensive income, not a P&L. And company should provide detailed disclosure about implied benefit in the financial statement. So let's move towards requirement B of the question. So we need to critically appraise proposed audit report. Snipe company has in place a defined benefit plan for its employees. An actuarial valuation on 31st January 2022 indicated that the plan is in deficit by $10.5 million. The deficit is not recognized in the statement of financial position. Mean they haven't recorded this deficit anywhere. An extract from the draft report is given below. If we discuss 10.5 million materiality against total assets, defined benefit plan, deficit, they haven't recorded under other comprehensive income as well as liability. So we can discuss against total assets, we can discuss against, it's not income statement item, we should discuss only with total assets. So 10.5 million against 175 is about 7% and hence material. Is that? And per IAS 19, this actuarial loss should be recorded under other comprehensive income, and company haven't recorded mean there is material misstatement. What should be the audit report? Qualified except for due to material misstatement. Okay. So from here we are having extract of audit report that we need to critically appraise. Explanation of adverse opinion in relation to pension. What does that mean? This paragraph is having heading explanation of adverse opinion in relation to pension, and the second paragraph is auditor opinion. This means this is opinion paragraph. This is what basis for opinion. First, the heading is inappropriate. If it is basis for opinion, the heading should be basis for qualified opinion. The heading wording is wrong. And second, 10.5 million is -% of total asset and hence material rather than pervasive, requiring qualified except for opinion rather than adverse. So using adverse opinion is inappropriate. 2 points. Heading, and second, materiality, and third, material rather than pervasive. So adverse opinion is inappropriate. There must be qualified report rather than adverse. Shall we move on? Based on heading, we can prepare so many points. The financial statements do not include the company's pension plan. In basis of opinion, we need to explain the reason why we are qualifying the report. So he is stating the matter, accounting standard, amount of misstatement, effect on financial statement, and justification of materiality and pervasiveness. 5 points. So he has stated the matter. This deliberate omission contravene accepted accounting practices. Management deliberately omitting, this is a harsh word. We are targeting integrity of management. Though there is a misstatement, but we should not say in these kind of direct word, harsh word. Management might be they haven't recorded this unknowingly, but we are saying deliberately they did this. We must say there is misstatement, there is omission of this account balance. Deliberate omission mean we are hitting the integrity of client management. We should not use these kind of hard word. These kind of word is inappropriate. So deliberate, we can make 1 point. And then contra means accepted accounting practice and means that the accounts are not properly prepared. But accounting standard is not followed. So you must say there is a non-compliance of IAS 19 employee benefit. Even the amount of misstatement that is 10.5 million, you must mention in basis or opinion that is not there. The effect of this misstatement on the financial statements is not there. How you treated the matter as a material or pervasive? The matter is material, but you have treated it as pervasive. How? There is no justification for that. That is also missing. Auditor's opinion. The heading must be qualified opinion rather than auditor's opinion. Is that? In our opinion, because of the significance of the matter discussed above, the financial statements do not give a true and fair view of the financial position of Snipe Company. He is expressing adverse while the matter is just material requiring qualified, except for opinion. And of financial performance and cash flow for the year ended in accordance with IFRS. So we can answer in 7 points. 3 points on this heading, then deliberate, then the accounting standard is not mentioned, the effect on financial statements is not mentioned, justification of materiality pervasiveness is not mentioned, and the heading of this paragraph is wrong, and there must be qualified opinion rather than adverse. 7 marks. We are adopting an approach how to answer according to the marks, how to answer according to the marks. So let's move towards covering some more auditing standards. So we have got ISA 320, ISA 700, 701, 705, 706, ISA 500. Let's move towards some more auditing standards. So ISA 320 materiality we have covered. ISA 700 we have covered. ISA 705, 706, 701, 500 we have covered. Audit evidence. Even we have discussed about 720 yesterday as well, other information. Let's move towards one more auditing standards. ISA 580. Written representation. As per ISA 500, auditors shall obtain sufficient appropriate audit evidence before expressing the opinion. Is that? Sometime during audit, there are some account balances against which we are unable to obtain sufficient evidence. Sufficient means quantity. So to make the audit evidence sufficient, what we do, we require some additional evidence from company management. Please write down on this page, this matter, this figure is similar, accurate that you have written in the financial statement, and that page that we are requiring from the management as a extra evidence, that is called written representation. To make the audit evidence sufficient, we require written representation from management. But on its own, written representation is not sufficient evidence. We should always obtain corroborative evidence. Corroborative evidence means extra supporting evidence. Extra supporting evidence means the evidence that we have obtained while performing our procedures. If our evidence means corroborative evidence are not sufficient, corroborative means extra supporting that we have obtained through our procedures. Those are called corroborative. Extra supporting with written representation. If our evidence are not sufficient, we are requiring written representation. If there is only written presentation, no corroborative evidence, that is a scope limitation, we will qualify the audit report. If there are only corroborative, we asked the management provide written presentation, they refused. Our evidence is not sufficient, scope limitation, we will qualify the audit report. If we are having both written presentation and corroborative evidence, we are having sufficient evidence on which we can give opinion. If we are having written representation and corroborative both, but they both are contradicting with each other. The representation saying something different, or corroborative evidence saying something different. Who is accurate? Nobody. Because on its own, they are not sufficient. On its own, they are not sufficient. In that case, scope limitation, we will qualify the audit report. Only corroborative, no written representation, scope limitation. Only representation, no other evidence mean corroborative, scope limitation. Both are there, but both are different, not consistent with each other, scope limitation. If we have a both are similar, same, then we'll be able to express an opinion. So to make audit evidence sufficient, we require written presentation from the management. Who is providing evidence to whom? Management providing evidence to auditor. But interestingly, the wording of written representation is drafted by the auditor. Auditor will draft the wording and ask the management to sign and give us as evidence. So management can refuse. If they refuse to provide written representation, means sign the written representation that you have drafted, what we should do? If they refused, first we should convince them with the alternative wording. Might be that wording, they are not happy with the wording, so we should convince them through alternative wording. If they still not agree to sign, even with the alternative wording, we should discuss the importance of matter with them. This is important for us. If you don't provide, will not be having sufficient evidence, will not be able to express opinion, please sign this. Still, if they are not signing, we'll discuss with them, okay, don't provide us this written evidence. What you do? Call a meeting of board of director. In front of board of director, we will discuss the matter and we will take the minutes of that meeting as a evidence. Minutes of board meeting. Okay, don't sign this page. Let's call board meeting. We will discuss this matter with the board. We'll take oral approval and those meeting minutes we will record as a evidence. But if they are still not agreeing with you, even to call the meeting, in that case, we are having two options. Either to qualified report or disclaimer due to scope limitation, or we should withdraw from the engagement, mean resign from the audit. Because if they are not providing evidence, despite they have stated figure in the financial statement, this means there is something wrong. They are fraud Africa. We should not associate our audit report with these kind of people. We should withdraw from the engagement. The areas where we got the evidence, whether they are true or not, even we are in suspicion now. Because they are not supportive enough. So we should not associate our report with them. We should consider withdraw from the engagement. So in case management refused to provide representation, what should be the course of action of the auditor? Convince the management with the alternative wording. If they do not agree, discuss the importance of the matter with them to convince them. Still not agree, ask them to arrange board meeting so that we can take minutes of the meeting as evidence. Still not agree, then qualify report due to scope limitation, or if possible, withdraw from the engagement. Whether we require representation for all account balances? No. We require representation for those account balances where we don't have sufficient evidence. And what are those areas in financial statements where normally we require representation? There are two types of areas in the financial statements against which we require representation. One is matters known only to management. There are some matters that known only to management. For those matters we require representation. What are those matters? Related party transactions. If company have performed related party transactions, they haven't provided the disclosure, can we identify whether a transaction is a related party or arm's length? No. So at the end of audit, we ask the management, please sign this page that our related party transaction has been disclosed to the auditor and in the financial statement. Because this is a matter known only to management. And there are some matters whose figure is based on estimate and judgment. And that estimate and judgment is of company management. So we always obtain representation for those matters or matters involving estimate, judgment in measurement. Sorry. Yeah, exactly. This is the letter that we have written the wording and we have sent to the company management. Please sign this. These are the extra evidence. Let's discuss. Give me 2-3 minutes more. It will be clear. So there are two types of matters against which we require representation: matters known only to management and matters involving judgment estimate in their measurement. What are the matters involving judgment estimate in their measurement? Provisions, especially warranty provisions, if they have recorded any warranty provision, whether that amount is accurate or not. This is management estimate. These could be warranty claim in the future. So we'll require representation. Please sign this page. This figure is based on correct estimate. As well as depreciation, amortization. Depreciation, they have charging 10%, asset life is 10 years. Depreciation, they are charging 20%, asset life is 5 years. They are charging depreciation of 2%, asset life is 50 years. If we can verify the life of asset by consulting any of the expert, then we are having sufficient evidence. But if there is no expert available or to consult expert require more cost, then we will ask the management to provide representation. Your estimate is accurate, you can use this asset for these number of years. There are certain matters in the financial statements that known only to management. At the end of every audit, we require some compulsory representation. What are those matters? There is a list. Matters known only to management. Matters known only to management are management responsibility. At the end of every audit, we require a representation from management. Please sign on this page that you have fulfilled your responsibilities of preparing financial statements, implementing internal control system, providing information access to auditors. This is what matter known only to management. Matter known only to management Assumption and estimate mean if figure is based on assumption, estimate, we ask the management, please sign this page. Your assumptions, your estimate was accurate. In this figure is based on accurate assumptions and estimate. Matter known only to management are what? Related parties. We ask the management, please sign this page that our related party transaction and relationship with the related parties has been disclosed to the auditor and in the financial statement. Immaterial misstatement, we will ask the management, please sign this page. If there is any misstatement in the financial statement, that is not material. Mean uncorrected misstatements in the financial statements are immaterial. And we require representation regarding subsequent events. Mean all post balance sheet adjusting events has been adjusted and non-adjusting events has been disclosed in the financial statements. Please assign this page. If there is any fraud committed in the organization, that fraud has been disclosed to the auditor and corrected in the financial statement. Please sign this page. If there is any non-compliance with law regulation that has been disclosed to the auditor and reflected in the financial statements, please assign this page. And if there is any litigation against the company, that litigation has been disclosed to the auditor and in the financial statement, either contingent liability or provision case, please sign this page. So these are what compulsory representation that we require from management at end of every audit, because these are the matters known only to management. During audit on sample basis, might be we are not aware, we are not detecting these issues. So we require management these compulsory representation at the end of every year audit. Management responsibility, estimate assumptions based figures, related party transactions, subsequent events, uncorrected misstatements are immaterial, fraud, NOCLAR, this stands for NOCLAR. NOCLAR stands for non-compliance with law and regulation. NOCLAR. Non-compliance with law and regulation as well as litigations. So we require representation regarding two matters, matters known only to management and matters involving judgment estimate in their measurement. And reporting effect we have discussed. If management refuse, what should be the course of action we have discussed. Let's move towards discussing one more auditing standard, then we will wind up for today. ISA 570 going concern. The going concern. That company will continue its business in next foreseeable future. Foreseeable future mean at least 12 months. Okay. Regarding going concern, there are some management responsibilities that we must be aware about. And there are some auditors' responsibilities that we must be aware about. What are the management responsibility for IAS 1? Management need to prepare financial statements on going concern basis. If company is going concern, mean they should prepare normal financial statement. In fact, before preparation of financial statements, they should assess the company's ability to continue as a going concern. Assess company ability to continue as going concern, mean they should assess whether company is a going concern or not. And if company is a going concern, they should prepare financial statements on going concern basis. Normal. But if company is not a going concern, they should prepare financial statements on the breakup basis. Also called realization basis. Also called liquidation basis. If company is not a going concern. What is meant by breakup basis? All asset, non-current assets should be recorded as current asset because they are not going for more than 12 months. All non-current liabilities should be recorded as current liabilities because you are not going to settle liabilities in more than 12 months. You need to settle within 12 months. You need to show how much assets covering the liabilities and how much extra that shareholder can take to their home. And if there are more liabilities, lesser asset, or the extra liabilities, you need to create provisions. This is what breakup is. And then IAS 1 says, if there is material uncertainty, cash flow issue. The uncertainty means cash flow issue must be disclosed in the financial statement. There must be disclosure in the financial statement, like companies having this cash flow issue that will be able to resolve through this. If they haven't provided this cash flow issue disclosure in the financial statements are wrong. If company is not going concern, they have prepared financial statements on going concern basis, financial statements are wrong. So who should assess company ability to continue as a going concern? Company management. What auditor need to do? Auditor need to evaluate what management assessment of company ability to continue as a going concern. If management is saying company is a going concern, auditor need to evaluate whether company is going concern. If management is saying company is not going concern, auditor need to evaluate, yes, company is not going concern. Their assessment is accurate. If companies are saying there is a cash flow issue, not going concern issue, auditor need to make sure there is cash flow issue rather than going concern issue. Because there could be chances companies are not going concern, but management is saying, no, there is a cash flow issue that we can resolve. So we need to provide only the disclosure rather than preparing on breakup basis. That they will try to do. Auditor need to evaluate management assessment of going concern to see whether that assessment is appropriate or not. And if auditor is having doubts about management assessment, auditor should perform some audit procedures. As per ISA 570. What are the audit procedures that auditor should perform? Auditor should inspect cash and profit projection of next 12 months to see any chance of recovery in the future. Inspection of cash and profit projection for next 12 months to see any chance of recovery in the future is what procedure? The examiner is asking about evidence. Copy of cash and profit projection for next 12 months to see any chance of recovery in the future. Auditor should inspect latest management accounts. What are management accounts? Budgets, standards that we need to inspect to see any chance of recovery in the future. Auditor should inspect post year end order book, mean whether companies are receiving bigger order from the customer, companies are having some contract with the customer. This means there is chance of recovery. If in post year end, mean after the year end, mean in our final audit period, company is not receiving bigger order from the customer, there are no contract with the customer. This means this issue will not resolve, mean companies having issue going concern. If company management is saying, no, we are having some negotiation with the bank, they will support us. We are in process of a loan approval. They will approve loan. We can resolve our issue. So we should confirm from the bank how much chances of the loan approval. Might be bank will say, oh no, how we can approve loan for this kind of company. So independent confirmation. From bank through bank confirmation letter. This bank confirmation letter will be evidence to see any continued support from the bank, whether approval of loan, approval of any overdraft facility. So we should confirm from the bank. We should inspect latest board minutes. To ensure or to verify how management considering the situation. From their discussion, will be able to identify whether company will be able to resolve their going concern issue or they are not in a position to resolve, because their discussion with each other in a board meeting will provide a true picture. So that's why we should inspect latest board minutes. What else? We should inspect correspondence with the suppliers for continued support. Because if you are having going some cash flow issue, this means you are not paying amounts to the supplier on time. So they stop support. No credit basis purchases now onward, only cash basic purchases. And this create even more problem for the company. So if there is any correspondence, I mean communication with the supplier, so we need to inspect that as well. If this company is a subsidiary of any parent company, and we are conducting audit of subsidiary, in subsidiary there are going some issue. We discussed in the management and they are saying, no, we will get support from the parent company. We are going concern. So we need to take a written representation from parent company, whether you will support the subsidiary or not. That representation is called letter of support, or called comfort letter from a parent company. In case of subsidiary going concern issue. So obtain letter of support or comfort letter from parent company for continued support to the subsidiary. If they have provided this representation, this means subsidiary is a going concern. If they are not providing this letter of support to us, mean representation, they are not providing, this means subsidiary is not a going concern. Then we will see whether subsidiary is a material from consolidation point of view. This means group as a whole is not going concern. So these are the procedure or evidence we can discuss in case of going concern issue. Now let's discuss reporting a fact relating to going concern. Circumstances. using the going concern basis of accounting is not appropriate. Mean company is not a going concern. Company is not a going concern. If company is not going concern and financial statements are prepared on going concern basis, is that financial statements true or false? Company is not a going concern, but financial statements have been prepared on going concern basis. This means they are wrong. Company is not a going concern. Company is not a going concern. This is the reality. So financial statements should be prepared on breakup basis, but they have prepared on going concern basis. What should be the audit report? Adverse, because whole financial statements are wrong. If company is not going concern, financial statements should have been prepared on breakup basis and management have prepared on breakup basis. So when financial statements are accurate, financial statements give true and fair and are prepared according to accounting standard, but they have been prepared on breakup basis. We need to highlight through shareholder. How? By including emphasis of matter paragraph. So financial statement prepared on alternate basis, mean liquidation basis. In that case, we will issue unqualified opinion with emphasis of matter paragraph. Can you understand these two reporting defects? Now we are moving towards some difficult situation. Very important. Company is a going concern. Company is going concern. But there is material uncertainty. Material uncertainty means cash flow issue. In this issue, that could be resolved and then company will continue its business. In case of cash flow issue, there must be a disclosure in the financial statement. So companies having cash flow issue. If adequate disclosure is included in the financial statement, when management have disclosed in the financial statements. So opinion qualified or unqualified? Unqualified. So opinion should be unqualified. But this cash flow issue disclosure is important from shareholder. We should highlight in the audit report. How? By using emphasis of matter paragraph, but for highlighting this cash flow disclosure, we will not use emphasis of matter. Instead, we will use a new paragraph called material uncertainty relating to going concern in the audit report. The similar way we highlight any disclosure of financial statements through emphasis of matter. This cash flow issue disclosure we will highlight through material uncertainty relating to going concern paragraph rather than emphasis of matter. And only under this situation, this paragraph will be included in audit report. Never ever otherwise this paragraph will be included. If there was cash flow disclosure required in financial statements, but they haven't provided, so that is material misstatement. In that case, we will qualify the report and explain in basis for opinion paragraph. When we will use material uncertainty paragraph, when there is a cash flow disclosure in the financial statements that has been correctly disclosed. To highlight this cash flow issue disclosure, we will not use emphasis of matter. We will use material uncertainty paragraph. Yesterday, in previous lecture, we discussed this example with emphasis of matter. But this is not example of emphasis of matter. If there is cash flow issue disclosure in the financial statement that we want to highlight for shareholder point of view, for that we will not use emphasis of matter. Instead, the paragraph heading will be material uncertainty relating to going concern. This is also called going concern paragraph. If financial statement prepared on breakup basis, that we will highlight through emphasis of matter. That we will highlight through emphasis of matter. But if there is cash flow issue disclosure, that we will highlight through material uncertainty relating to going concern paragraph. If there is cash flow issue, management haven't disclosed in the financial statements. There is only one disclosure, not there. Material matter rather than pervasive. Only one disclosure is not there. Come on. Rest everything is fine. So this is what? Material or pervasive? Material. This material. So qualified except for opinion. Qualified except for opinion rather than adverse. Are you with me? So if company is not a going concern, financial statement prepared on going concern basis, adverse report. Financial statement prepared on breakup basis, unqualified opinion with emphasis of matter. If company is going concern but there is cash flow issue, mean material uncertainty existed. If that cash flow issue has been disclosed appropriately in the financial statement, opinion should be unqualified, but material uncertainty relating to going concern paragraph should be included to highlight this cash flow issue disclosure. If there is cash flow issue but has not been disclosed in the financial statement, then qualified report. Are you with me? Only under this situation, this paragraph will come in the audit report, otherwise it never ever will come. Where it should be placed? Before CAM, where we placed emphasis of matter. Instead of emphasis of matter, this paragraph name will be material uncertainty relating to going concern. Are you with me? That's it for today. We have discussed how many auditing standards: ISA 320 audit materiality, ISS 700 standard weighted unmodified report, 705 qualified adverse disclaimer report, 706 emphasis matter other matter, 701 CAM, 720 other information, 500 audit evidence, 570 going concern, 580 written representation. And we have practiced 2 questions. I hope before attending next class, you will attempt both the questions. If possible, please show to me, so that if there is anything lacking, we can improve before moving towards the examiner, if possible. Not showing, no practice. See you in next lecture.
Thank you, sir. Drafting alarm kulichittu prarthikkatta.